Hey, this is Patrick Moore here, and welcome to the October edition of Schedule CE. This month we're going over the Augusta Rule. So, just a quick little intro about Schedule CE. Every month I take a topic, be that a tax topic, a protection topic, a business topic, whatever it may be for business owners, and I try and condense it into a quick, 5-ish minute video, or in some cases a webinar, to just give you kind of the lay of the land and give you a brief educational overview to see if it works for you. So the Augusta Rule is our topic this month. And before I dive in, I do want to say real quick that no way, shape, or form is this personalized advice, right? If you do think this works for you, this is general educational, please speak to your own tax advisor to figure out if it works. Now, first things first, who is this call for, okay? If you're a business owner and you own a business and you own your own house, and you've been wondering, can you save on taxes? That's who this video is for, all right? Because the Augusta Rule is a rule that is in the U.S. tax code, the Internal Revenue Code, that can allow you to exclude certain amounts of income earned from renting your residence. Now, this actually originated, you can probably guess, from Augusta, Georgia, back in the 70s. The residents of Augusta, they've got, honestly, a pretty thriving little gig where every year when the Masters comes to town, not only do they rent to traveling fans, but they'll rent to the players. And they'll rent their houses for that weekend, the weekend before, and they'll make, in some cases for the really nice homes, thousands and even tens of thousands of dollars just by renting those homes. And what they said back in the 70s is they said to the IRS, hey, this is not a legitimate business activity. This is really just something that we're doing very short term. We don't think this should be treated the same as renting property. And after lobbying, the IRS eventually agreed. Now, the reason that we're talking about this is because the IRS didn't just carve out one little piece of the tax code for the residents of Augusta, Georgia. The rules they wrote apply to everyone nationwide, okay? And those rules can kind of be summarized in three main categories, and really category 1 and 2 are interrelated, right? Because the main rule is that this can't be a rental property, okay? It can't be something that is an actual business activity for rent. First and foremost, it must be a residence, and the easy way to define that is that means that it's being rented less than 15 days per year. So if you think about it in your own terms, that means, hey, you can rent up to 14 days per year and not a day more, okay? That's what qualifies this as a residence and not a rental activity. And there's some more sophisticated kind of use rules, but that's really the very narrow, I think, easiest definition to explain. The second item, or really third item here, is that the rent must be reasonable, okay? If you're looking at this and you rent something for $2,000 a night, and really it's worth $300 a night, you're really only going to be able to exclude that $300 per night rate. And that really comes into play when we talk about the business use of this in a moment, because obviously this isn't business specific, right? This is something that you could just use for yourself whenever. Right here, this is something that's very much about your rent being reasonable, and that's going to come into play when we talk about how you can use this in your business, okay? So once again, we've got the business on the left, we've got your personal residence on the right. Let's say you earn about $500,000 a year in your business, your tax rate's 37%, the highest federal marginal rate, and your taxes are $185,000 per year. Well, the way the Augusta Rule comes into play for you is that you can create a rental agreement between your business and you individually to rent your home. And that can be a legitimate business expense. Now, you heard me say legitimate, right? Because there's two things here in the middle that are really important for us to understand, especially when we're talking about you and your business creating a contract together, because you control your business. When you're doing a business, kind of deal between a related party, under that arrow there, it says fair rental rate, $2,000 per day. Let's assume that's fair, right? But if it's not, and there's going to be a lot of scrutiny. Well, in the Augusta example, if somebody who's unrelated to you is going to pay you $2,000 per day, that's pretty straightforward, right? That's just the free market kind of open economics. There's no control there. But if you rent it yourself and it's $2,000 per day, there's going to be a little bit more scrutiny on how you came to that number. So if your house is worth a $2,000 per day rental rate, or maybe it's an hourly rate, whatever you calculate, then your business can pay you that amount and still fall under these rules and regulations. Now, if you look above that arrow, there's one more thing that's probably even more important there, right? And that is that your home has to be rented for a legitimate business use, okay? Your business can't just pay you 14 days per year and you write down a rate and say, hey, let's just write this off on our taxes. It's not how this works. A legitimate business purpose could be something like having a board meeting with like your top three, whoever your C-suite is, or say your top three, or a sales meeting at your home. It's not just waking up saying, hey, I'm not going to work in the office today. Let's write something off. Another example, let's say somebody on the call today is a therapist, or, maybe a masseuse, something like that, where you have an office, you see people, whatever the case may be, right? But let's say you have Saturday hours and you want to see people on a Saturday. Well, rather than going into the office on Saturday, if you have people at home, your business could rent that property from you to do that. But it has to be a legitimate business use, okay? So let's assume that those two items are met. If they are, in this example, $28,000 in income goes to you individually from your business. What that does is it takes your business income down $28,000 because it's a legitimate business expense. At that same tax rate, it saves you about $10,300 in this year's taxes. And if we look at what happens to you personally, because you kept that business use less than 15 days, rented your home less than 15 days, you don't pay any taxes on this, which saves you $10,000 by simply using your property for something you would be doing, in some cases anyway, but you needed to have a separate venue. Now, something to note, and the reason why this works is any business could rent your home for 14 days, right? Your best friend's business could rent your business for 14 days, or, Joe's business down the street could rent your home for 14 days, and it would still fall under the Augusta Rule. It's just by you having your own business and you having a separate corporate entity, it allows you to do this on your own. Now, I just want to give a quick reminder before we break for the day. There's 3 keys. It needs to be a legitimate business purpose, whatever that may be in your business. It needs to be a reasonable rental rate, and there does need to be a true agreement between you and the company. Sometimes reasonable rental rate, that can be something, as simple as actually getting an appraisal done. I think that's probably the most bulletproof way to do this. And then the second one, true agreement between you and the company, is it's never going to hurt to have that agreement in writing. And in fact, I would 100% recommend the appraisal and having something in writing for you and the company. So with all that being said, that's it for the quick video today. Looks like we kept it to about 8 minutes. If you have any questions, feel free to reach out to me, ask your own advisor. Whatever I can do to help. I just love sending these things out, and we will wait to, see what next month's is. Have a great day. Bye-bye.